Hello there, this is James and you're watching Tixee Live. In fact, you're watching Tixee Live watch along of the all-important US Non-Farm Payroll. Now, before we get into all of this, because this potentially could be a massive event, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand for entering any trade. With that out of the way, let's get started. So, hello. Hello, John. What's my number I'm expecting? I will get to a very good question. I will certainly get to that. Eric, my friend, good to see you. How you doing? And yes, happy NFP time indeed. 3 points. Oh, that's unemployment. You think 3.7 for unemployment? Anyway, great to see you, Eric. Great to see you. What number do you think? But anyway, let's get started with the show. So yeah, like I say, this is Tixee Live watch along of the US Non-Farm Payroll. So happy NFP Day. Now, for those of you who are new to trading, they might want to know what the NFP is and why it could be so important. Well, the non-farm payroll, NFP, is released by the US Bureau of Labor Statistics, and it illustrates the number of new jobs created in the previous month, not including farm workers or agricultural workers, hence the title non-farm payroll. Now, why is it important? Why is it crucial, certainly for the Forex market? Well, it can have potentially a substantial impact on the markets as traders watch it closely to identify economic growth. But more importantly, today, the market's going to be watching it because it can indeed put pressure on the Fed, and it could affect their decisions and give market a little bit of hope. Because let's face it, the Fed needs employment to start to fall, to bring down inflation. And unless they start seeing a fall in employment, a dramatic drop in employment, they will not be comfortable enough that they're getting on top of the inflation issue. Now, the expectation for the NFP is to come in at 200,000. The previous reading was 263. It will be funny after the Fed meeting. It will be hard. That's one of my concerns, Eric. It'd be very, not funny for the markets, though, as you just rightfully said just then. You're right, not funny for the markets. And we'll talk a little bit about that Fed meeting as well, because that really has put the cat amongst the pigeons. So anyway, the expectation is 200,000. Okay. Previous reading was 263. If it does come in at that number or lower, this would be the lowest reading since December 2020. Unemployment is also expected to come in at 3.6. Previous reading was 3.5. But the question we have to ask, is there any surprises? And this is going to answer John's question earlier on, okay? What I think the number potentially could be. Because let's face it, the NFP has surprised a lot of people over the last 12 months. The ADP also came in 239 versus 192 expected. I'm not one of the traders who see a connection between the ADP report and the NFP, but still, That came in better than anticipated. Plus, if we go over the last 27 releases, there's been 12 negative and 15 positive. In the last, so far this year, let's go through some of these numbers and how it surprised us. January, the expectation was 150. The actual release was 504. February, 400,000 was the expectation. The number which came in was 714. March, 490. Actual release, 398. Well, first time it was lower. April, 391. 368 was the actual announcement. May, 325. Release, 388. June, 268. Release, 537. July, 250. Release, 526. August, 300,000. Release, 315. September, 250. Release, 263. Now, answer John's question. I have a feeling it's going to be slightly higher than anticipated. I really do. Because like I say, the labor market is still extremely strong. The number of initial claims is still very, very low. The number of job openings is very, very high still. So I am expecting a growth in this number. But again, like I say, the NFP in many ways is a gamble. Because like I say, nobody knows for certain what that number is until it's released. This is why the NFP has to be treated with caution. But there's something else I want to talk about in reference to the NFP. Because the market, despite what I think, and like I say, I might be wrong, the market needs a softer reading. Desperately needs a softer reading. Because the Fed will not stop until they get their interest rates above 5% or above. And that's going to hurt the market. And as well as that, the bear market rally is beginning to lose pace quite dramatically. In fact, the S&P fell yesterday by another 1%, and it's down from the peak at 5%. In fact, it's actually on a 4-day losing streak, really fueled on by that Fed press conference and the fact that the Fed is absolutely committed to fighting inflation. So we really do need an ugly number, because otherwise the Fed will just keep continuing to be aggressive and exporting its pain to the rest of the world, making the dollar stronger, which is hurting everybody outside the United States. Now, we've got about 2 minutes to go. Before we go through the scenarios, I want to share a little something with you, which is almost as exciting as today's announcement. I'm a big fan of the Elliott wave theory as well, by the way.
Let's go.
Very big fan.
I traded the DAX in the morning, showed some really good signs of volatility as well.
Anyway, let's get started with the topic of today's episode of the Trading School.
Quite an interesting one.
Yes, well, there we go. A brand new series live every Wednesday called the Trading School. So please come and keep an eye out for that. On Monday, I'll be sending out on this program, on the next tixee Live, a registration link for you to attend. It's a cracking new series. I'm very proud of it. And I really enjoy working with my colleague as well, Stefanos. So I hope that you can come along and join us soon. Anyway, back to the matter at hand, the NFP. So let's go through some couple of scenarios. Like I say, we really do need an ugly number to give the market a bit of a boost. Now, potential scenario number one, NFP is announced as expected. Market gets a bit of a boost, but nothing really, but not much because it's priced in. Potential scenario number two. NFP is announced lower than expected. Market gets a boost. US dollar comes under pressure. And scenario number three, NFP announced higher than expected. Job market is not slowing down and the market comes under pressure. Anyway, it's about to come out. Let's get ready, guys. And ladies and gents, of course, let's get ready. Here we go. As normal, I've got my trusty mobile, so I can get the data as soon as it comes in. Okay, this is gold at the moment, guys. We'll be looking gold, dollar, yen, euro, and sterling. But I'm keeping a close eye on gold at the moment. Okay, 9 seconds. 9 seconds. 9 seconds. Okay, it should be released. Oh, we've got a gap on gold straight away. Oh, my. 261. 261. higher than anticipated. Higher than anticipated. The job market is not slowing down. 261. Nope, wrong slide. I got so excited, put the wrong slide in. God, blimey, yes, higher than anticipated. Higher. Unemployment. Eric, you're on the money, my friend. It was 3.7 unemployment. So unemployment came in slightly higher. So there we go. 261. 261. It's just not slowing down. Not slowing down. Let's have a quick look across the board. Across the board on everything. Dollar yen spiked up at 148. Euro dollar 0.9758, again under pressure. Let's look at the sterling, because sterling's been having a hot. All right, sterling, okay, also under pressure, 1.11. So under that key level, which was holding for a while at the moment, at 111.75. So yeah, there we go. Wow, Eric, what do you think of that, buddy? What do you think about that? That's something else. That's something else. I'll look at that number again. Gee. Average earnings, better as well, because average earnings came out as well today at the same time. Average earnings is 0.4 month on month, year on year, as expected, 4.7. So that came in better, because the expectation was 0.3. But wow. Let's not, again, not saying that I called it. Not saying that I called it, but I just had a feeling. It's interesting, that number. Yeah, it was interesting. What was the previous number again? This is interesting as well. This is interesting as well, though. Look, they revised the previous number. Because the previous number was, 263. They revised it higher to 315. So technically, this is lower than it. So we can see it slowly, gradually coming down. As long as you're safe, my friend, trade safe, of course. But this is a really exciting time. This is a really exciting market movement. Good to see you. I hope you're well, and I hope you're having a great day. Yeah. So technically, it's 315 previously. So we see it slowly becoming to come down, but it's not coming down quick enough though. So 261. So what? Yeah, it's amazing. I know. Amazing. I know. It's something. Again, it just doesn't seem to be slowing down. All right, let's look at the cables. Look at a couple of other things. See how gold is doing now, because gold was the first thing we looked at. Okay, again, we're going to have a bit of a yo-yo initially. Let's look at the S&P 500 as well. See how that felt about it. Yeah, it's getting spiked down a little bit, but coming up. But like I say, it is interesting to see that they revised the previous numbers to 315. We're now at 260, 261. So it is slowly coming down. But like I say, it's just not coming down quick enough. Well, like I said, I had a feeling. I really did have a feeling that we were going to get a higher than anticipated number. I really did. But yeah, it's just not that at the moment. But yeah, Eric, what do you reckon, buddy? What do you think about that? What do you think about that? Wow. What does everybody else think about that? Well, what's everybody's opinions? Are you surprised like I am? Or, I mean, it's not, like I said, I remember a couple of weeks ago, when was it? When it was supposed to come in at July it was. It was supposed to come in at 250, but it actually came in at 526, which was a shocker. So it's not that big a shocker, but it's still shocking enough. Let's have a look where the dollar yen is. We are going to see that. I mean, don't forget, we have the US session opens up in 55 minutes. 55 minutes the US session opens. So that's going to be really, really fascinating to see how the US react when it opens up. Because, like I say, again, it's not the ugly number the market needed. We needed an ugly number. We didn't get an ugly number. We had indications, especially with the revised number, that maybe there is signs it's slowing down. But but it's still not the 200 or 195,000 the market was hoping on. So there you go. There you go. It's going to be really fascinating to see what happens in the US, especially, like I say, when the market comes down. Hello there. Hi. It came in better. It was supposed to come in between 195 to 200,000. It came in at 261. 261. Nice to see you, by the way. I hope you're well, and I hope you're having a great day. Hope you and your family are well. It came in higher than anticipated at 261. So a big shocker on that. Big shocker on that. Next, of course. Next, the market is going to be really high. Hi to you too, buddy. I hope you're good. Nice to meet you. Next, of course, the market is going to be all looking towards something happening next week, which, of course, is the US CPI. Now that is going to be really fascinating and interesting. Really fascinating and interesting to see if indeed that comes in hotter as well. Because that's going to be the other thing. That's going to be the other thing. Because like I said, don't forget, last time anticipation for it was to be 8.1. It came in at 8.2. Core was supposed to come in at 6.3. It came in at 6.6. So that's going to be a big thing. But anyway, bit of a surprise today. Let's see how the market catches its breath and reacts, and see how the market at the moment. We're going to have this yo-yo in the market like we always do with the NFP as it tries to work out what it all means. But in general, I think the mood's going to be pretty bearish, because again, that number is just not coming down. Don't forget, I'll be back online again in a couple hours' time to cover the US session, and we'll discuss how the market's reacted to this data and what's happening now and what the word of mouth is. Plus, we'll also have probably more developments on that Twitter story I talked about this morning as well, because don't forget, those poor employees will find out at 4 p.m. UTC. So they would be going back, finding out if they have a job or not. So that'd be interesting. Yes, of course, you can see the euro dollar again. Yep. What's your question? Yes, like I say, they're going to. The market has this sort of reaction with the NFP. Okay, the NFP, it tends to react dramatically, then jump back up, and it would be like a yo-yo for the next 20, 30 minutes or so, till the market gets, makes his mind up on exactly what this number means. This is what the NFP does. This is why it's incredibly volatile. This is why, for example, one of the, what a lot of traders do, okay, is they trade what's known as vanilla options, okay? And because of the volatility with the NFP, what they do, they buy a call out of the money, and they buy a put, with the idea that because the volatility, one of the options will be in the money and make the profit. So that's what will happen. Everything is sort of moving back up, but bouncing back up. But there we go. See, in gold is bouncing back again. But like I say, it's going to be interesting to see how the US reacts when the US has caught its breath and digests this. So that's going to be really, really interesting to see that. It really is. I mean, gold, what's I say? Gold is what moved sort of $16 on the back of that announcement. So not overly dramatic. What is everybody else trading out of interest, though? What's everybody trading at the moment? What other instruments are they interested in? Don't forget, as always, if you ever think of a question, okay, you can put it in the comment section, either on YouTube or Facebook. I will see them and I will reply to it next time I go live on air. Indices, excellent. Anyone in particular, S&P, or are you more European equities? S&P has been fun. Like I said, the S&P has been S&P 500. Good man. And I like the S&P. Like I said yesterday, I said earlier on, the S&P has had a 4-day losing streak. So it'll be interesting to see how the market reacts to it. I mean, at the moment, like I say, like everything else, it's bouncing and yo-yoing, as you can see. But it'll be interesting to see how the market reacts. Because there could be two things. Like it's the way I look at it. I think, like I say, the market might start panicking a little bit again, potentially, because obviously they would view it as the case. This is too good a number. The Fed's not pulling back, and they're going to carry on being aggressive. Or, like I pointed out just a minute ago, they revised last month's number, which was initially released at 263, but it then came out. They revised it today to 315. So that does show that it's slow down, just not dramatic as they had hoped. So there is that as well. It should be fascinating to watch. So yeah, like I say, don't forget to come join me. Join me today if you can, because I really think the US session is going to be really fascinating to watch. And on the back of what the week we've had, the Fed on Wednesday, press conference on Wednesday, and obviously Bank of England yesterday, and now the NFP. It'd be interesting to see how this week closes out. Okie doke. If there is no questions, big shout out to John, Eric, SMF 790. Eric and SMF 790, as always, thank you for coming. It's great to see you guys. Andre, for jumping in and having a chat with me. Really great to see you, my friend. I hope you're well and your family are well. So big shout out to you. Mr. Q, big shout out to you, Mr. Q. Thank you for coming along and, watching. And a special shout out to all of you, of course, for coming along and watching me today. I really, really appreciate it. Like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, by all means, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, find it interesting and useful, and liked me and put up with me, my over-the-top enthusiasm for the markets, I simply just cannot help, then give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.